Hello, my name is Jeff Stauffer, Community Relations Director with MarylandABLE & Associates, and welcome to our webinar today featuring MarylandABLE, presented by Kelly Nelson, MarylandABLE's Outreach and Communications Manager. This is MarylandABLE & Associates' first webinar of 2021, and we're looking to hopefully do about 100 of these this year, so welcome. We've been very fortunate to develop a strong relationship with Kelly and MarylandABLE over the last several years, and have presented together many, many times. And we're pleased to welcome Kelly back again for her presentation by popular demand. So how this will work today, all attendees are on mute. However, you have a voice. So if you have questions, and this presentation typically yields lots of questions, please note them in the questions panel on the right-hand portion of your screen, and we'll pause periodically throughout to get your questions answered. You also received the presentation by email ahead of time yesterday for your convenience to take notes on it if you wish. For CFPs, CPAs, and other professionals on the webinar today, you may receive 1.5 continuing education hours for attending. So if I don't have it already, per reporting requirements, please email me your board ID. And for CFPs only on the webinar, I need the last 4 digits of your social security number. I'll be sending in my attendance reporting tomorrow, so please be sure to get this information to me as soon as possible. Everyone will also receive a post-webinar feedback email right after the presentation, so we ask that you please just take a couple of minutes to fill out this simple survey to give us some valuable feedback about the presentation. And it's also an ideal time to request a time to meet with one of our attorneys for an initial consultation or document review should you have plenty of needs, or if you want to suggest a topic that might interest you for a webinar that you'd like to see us host in the future. So as we have a lot to cover today, I'm going to bypass the intro to our firm. You can visit elbowassociates.com to learn more about us, and Kelly's biography is in the chat box on your screen. And I'll say for those new to our webinar series, this is our first of the year. As I mentioned, we want to do a whole lot of these this year, and the education of our clients, advisor community, and the communities we serve is part of our practical mission of our firm. So please consider us, as well as our partners we host for our webinars, as resources for any questions or needs your family and you may have. So what we're going to do is we're going to start off with a brief poll to get started, and I'm going to launch that poll right now to get an idea of what's brought you here today, and also how familiar you are with MarylandABLE accounts. So, let's see here. I'm going to launch that poll. It's hard for me to read that poll, so I've got to print it out here. So I'm going to launch it, and the question is, how familiar are you with ABLE accounts? And the choices are, I have an ABLE account and I'm here to learn more. I have heard of ABLE accounts and I'm here to learn more. Thirdly, I am interested in setting up an ABLE account and have questions. Or fourth, I'm an advisor here to learn to better serve my clients. So if you can choose the best answer that applies to you, get an idea of our audience today. It looks like the majority have already selected, so we'll give just about 10 more seconds. Okay, so it looks like we have 36% saying, I have an ABLE account and I'm here to learn more. 36% saying, I have heard of ABLE accounts and I'm here to learn more. 9% saying, I'm interested in setting up an ABLE account and have questions. And 18% saying, I'm an advisor here to learn to better serve my clients. So welcome, we have a varied group, which is always great to see. I'm going to go ahead and close out that poll. And with all that being said, I'm going to go ahead and turn over the reins to the very capable hands of Miss Kelly Nelson with MarylandABLE. So Kelly should see that pop up, show up on her screen so she can share her screen with you.
All right.
There we go. So I'm going to turn off my camera so I'm not a distraction. It's all yours, Kelly.
Okay, I don't know what happened to my screen. It just, my presentation. Well, first of all, let me say, welcome everyone. Thank you so much for joining us. Jeff, thank you again for having MarylandABLE as part of your education series at Ellaville. We appreciate our partnership with Ellaville so much because they care about educating our community, as does MarylandABLE. So we're grateful for this opportunity. Let me just see if I can find my slides here. Here we go.
There you go.
There we go. Awesome. So I tell you that the poll that we just did was really helpful to me because it helps me to know, you know, who was on the presentation today. And as I could hear, we have such a varied group of attendees. So my plan for today is that I'm going to take you through an overview of the entire MarylandABLE program, because some of you are just wanting to learn more about it. So we're going to cover everything from eligibility to account management. We're going to talk a little bit about the history of ABLE and the federal legislation that makes it possible. And we are also going to specifically talk about MarylandABLE's program, as it varies just a little bit. I like to share with everyone as I begin a presentation that in addition to working with MarylandABLE as their outreach and communications manager, I'm also a parent of a almost 17-year-old now with multiple disabilities. And my daughter Lily has an ABLE account, and I serve as her authorized legal representative. So I have some practical experience as well as I do help her manage her account. And from time to time, I try to bring in some examples from like practical examples from our life experience, and I hope that they're going to be helpful. As Jeff said, we are going to pause at every major transition where I typically tend to get a lot of questions. So go ahead and ask them in the chat room, and I will be sure to get those answered. And if you happen to ask something that I'm going to cover later in the presentation, I'm going to let you know that I'll answer that in a bit, and there'll be room at the time at the end as well to get to anything we haven't discussed. So let's start at the beginning and just take a look at what is MarylandABLE. So MarylandABLE is a way for people with disabilities and their families to finally be able to save money without jeopardizing those really critical benefits, state and federal benefits, things such as SSI, Medicaid, and the waiver services that go along with them. And the reason I say finally is because for those of you who are familiar with SSI, you know that there's a $2,000 asset limitation. So people that receive SSI cash benefits, they rely on those benefits, but they also have that limit that says that they can't have any more than $2,000 in savings or checking or assets anywhere. And if they do, it either reduces their benefits or they could be disenrolled from the program. So for many, many decades, this has been an issue. And there's been a lot of advocacy over the years to do something about this. And so lots of parents, advocacy groups, provider agencies, they have been advocating, and a gentleman named Stephen A. Beck Jr. was the one that really championed that cause. And under his leadership, they were able to get the ABLE legislation passed. It was actually signed into law by President Obama in 2014, and it is called the Stephen A. Beck Jr. Achieving a Better Life Experience, and that's where we get the acronym ABLE. When it was signed into federal law, it gave states around the country the opportunity to open ABLE accounts, ABLE programs, but it didn't provide any funding for them to do that. So that's why it's taken some time to see ABLE programs grow throughout the country. Currently, we have 42 programs across the country, and it is picked up over the years, but it has taken a little time. The ABLE legislation falls within the Internal Revenue Code as Section 529A. And you say, oh gosh, Kelly, you know, why do we need to know this? And I just like to graze over it real quickly to let you know, because you're going to see some things as we go through the presentation that will make some sense as to why we have these regulations. And it's because we're actually tied into the IRS code. Okay, lots of people out there think that we're part of Social Security laws or registrations. There's misconceptions that we are under the DDA regulations. Some people even think we're part of the education laws, but that's not the case. We're part of the Internal Revenue Code, Section 529A, and we are partnered there with Maryland 529. And some of you may be familiar with Maryland 529. That's the college savings plan. Okay, so here in Maryland, Governor Hogan signed the MarylandABLE Act into legislation in 2016. Our program launched in November of 2017. So as you can see, we're still just a little over 3 years old here in Maryland. So we're finding that there's still people out there that haven't heard of us. We operate together along with Maryland 529. As facilitated by the state of Maryland. We share a board of directors and executive director. So you'll see some tie-ins also to some of the regulations that are in place for Maryland 529. So let's just first look at the criteria. Everyone wants to know, well, who is eligible? And there's so many misconceptions about the eligibility as well. So there's two main things that you have to keep in mind. In order to be eligible for an ABLE account, you must have developed, or the person must have developed the disability prior to the age of 26. So we hear this number 26, and this is where the confusion comes in. People say, oh, I can't open an ABLE account until I'm 26, or darn it, I'm already 26, it's too late for me to open an ABLE account. But the truth of the matter is, people can open an ABLE account at any time. We have ABLE account holders here in Maryland that are a couple months old, and we have someone who's in their 80s. So, you can have one at any point. You just had to have had the onset of that disability prior to the 26th birthday. And this is something that we're working on nationwide. We're advocating for this age limit to be increased to age 46 because we recognize that there's a lot of people out there that would really benefit from ABLE accounts. People with traumatic brain injury, people with Lou Gehrig's disease, things that have onset later in life sometimes. They're not eligible because they didn't experience the traumatic brain injury prior to age 26. So we're advocating with programs across the country to have that legislation changed. The second criteria is that you have to meet the Social Security's definition of a disability. So when people are enrolling in ABLE accounts, one of the first questions they're going to come to in the prompt is, are you currently receiving SSI? If you are, then you can bypass some of the other questions because we know then that you've already been looked at by Social Security Administration and you meet their definition. For those of you who have a family member that is maybe a child, someone under 18 that's not currently receiving SSI, that's okay. As long as the nature of their disability meets that criteria, you can provide what we call a disability certification. And this is a form that's available on the MarylandABLE website. You just take that to your physician the next time you're visiting and have that physician sign the form indicating the nature of your disability. And you just want to maintain that form in your files. It's not something that you have to submit to MarylandABLE in order to open an account, but rather something that you should maintain if in the event that you're ever audited. So Jeff, this is one of those places I want to do a little check-in here. And you let me know if we have any questions about the eligibility process.
Sure thing. It looks like we do have a question here, Kelly. Question is it permissible to transfer funds from an SSI account directly into an ABLE account? And if so, are there any specific criteria or conditions that must be met before we can do that transfer?
That's an excellent question. So the answer is yes and no, and it depends. A person is able to directly deposit or send money directly over to the ABLE account from SSI funds if the person does not have a rep payee. So if that person receives the benefits from SSI, they can have it directly deposited into the ABLE account because they don't have a rep payee, and you can just make that transfer yourself. For those that do have a rep payee, that money is going to have to go into, that separate account, whatever account that person chooses to receive their SSI funds. And then, excess funds that aren't spent on the things that you would use that money for normally, then they can be deposited into an ABLE account. But it can't be a direct deposit, if that makes sense.
Looks like we have another question that just came in. And that question is, what if you are eligible for SSI, what if you are eligible for SSI, but not currently receiving benefits due to appeal?
Mm-hmm. That's fine. That's why we have that disability certification form. So this would be an example where I'm going to use my daughter as an example. She is 17. She has multiple disabilities. She currently does not receive SSI because SSI is looking at the entire family's income. But once Lily turns 18, they'll look at her income alone, and she'll definitely qualify. But she's still eligible for an ABLE account because she meets the definition of a disability according to SSI. So what I would suggest is just have that form, the disability certification form that's available on our website. If you want to download that and take that to a physician, that's all you would need in order to open the account.
Okay, and that's all the questions for now. Thank you.
Great. All right. Those were good questions. Keep them coming, guys. That's what I'm here for. Just want to point out that the account management with an ABLE account is unique in that you can only have one ABLE account per person. This is a little different from other types of financial planning tools that you might have. For example, a college savings account with Maryland 529, there can be multiple accounts because a grandmother can open a college savings account, a parent, and they, or somebody can open one on their own, but they can all be the beneficiary of it. But with an ABLE account, right now, the way it's set up is there's one ABLE account per person, and that account is owned and operated by the person with the disability. Okay, so they're both the owner and the beneficiary on the account, which again can be a little different from different types of other types of financial planning tools. So with this process, we realize that if you have a child with a disability and they're under the age of 18, you are automatically going to be what we call the authorized legal representative on the ABLE account because the child is a minor and they have to have someone on the account with them. But if the person that you're have in mind is over the age of 18, regardless of their disability, the ABLE account is owned and operated by the person with the disability. Having said that, we do realize that there are plenty of folks out there that could benefit from an ABLE account, but they're not able to manage the account without assistance. And that's why we have the authorized legal representative that can step in and help with that process. In order to do that for someone who's over the age of 18, there has to be some certification or a process that you're going to go through that shows us that you're allowed to serve in that role. Lots of people say, well, I'm the parent and I am also the rep payee for my son's account, so I can automatically be the authorized legal representative. And that's not true, because when you're the rep payee for SSI benefits, that only gives you legal responsibility to help manage SSI funds. So an ABLE account is a separate financial account, so you still have to go through the process of being an authorized legal representative. And the way you can do that is a couple ways. If the adult child has documentation or something that says that you are their guardian, or you have power of attorney over property. These are types of things that you could just send a copy of this documentation in, the guardianship or the power of attorney of property, and that would give you the ability to serve in that role. Sometimes we run into a situation where parents haven't really gotten that far in the process yet. And they're like, gosh, I don't know if I just need power of attorney over property or a person or guardianship. We're really not sure about that right now. And that is where someone would definitely want to consult a legal advisor. The folks at Elville, they specialize in this. They can help you through that process. But if you're not sure yet, you can do what we call a limited power of attorney. That is a form that is available on the MarylandABLE website that was designed by the Assistant Attorney General for the state of Maryland, that makes it possible for the ABLE account beneficiary to sign and give permission to someone to serve as a power of attorney and authorized legal representative over the ABLE account only. So just understand that if you have the limited power of attorney, it doesn't cost you anything. It's just a form. You'll just need to get signatures notarized. But that is not going to work for other financial accounts. It's not going to work if your family member goes into the hospital and you have to make decisions. That's power of attorney over medical and person. So that's totally different. But we do have a way around being able to make it possible for someone to assist as power of attorney for ABLE accounts and serve as the authorized legal representative. Are there any questions about that process?
Let's see here, Kelly. We have one question. We did a power of attorney with Elville as part of estate planning. Would that work here?
If the power of attorney is over financial as well, and there's different types of power of attorney over person or medical or property, and if it's over property, then yes, that would be perfect. You just send in a copy, upload a copy of that, and you would be able to serve as authorized legal representative.
Okay, another question. Follow up to my earlier question. My son has an SSI account and I am his rep payee. We do use his SSI account to pay for qualifying expenses. Yes. But are you saying the SSI funds left over after paying those expenses can just be transferred into ABLE without first meeting any other specific criteria? Thank you.
So that's one of the reasons that the ABLE legislation was passed, because let's just say, somebody receives $700 and some odd a month, and they use $500 a month for their living expenses and all the things, and they carry that balance $200 into the next month. The same month, this goes on and this goes on. Before you know it, you're approaching that $2,000 limit. So people were having to spend down money on things that they didn't need or want just so they wouldn't go over that $2,000 limit, right? So yes, the answer is if you have money left over from the things that you're supposed to be spending your SSI funds on, you can take that money and put it into an ABLE account, and then it becomes a protected asset.
Thank you. And one more question. I opened an ABLE account for my son, who's 14 years old, with me as the ALR right now. I believe that's authorized legal representative.
Yep.
What will happen when he turns 18 years old? Will I need to get a formal guardianship at that time?
Well, that would be something that you would need to decide, consult an estate planning attorney. Is if you think you need guardianship, then you can pursue that path. You may just need power of attorney to assist your son in managing property or assets or medical decisions. That would be totally up to you. But in the meantime, when he turns 18, you will be receiving a letter before his 18th birthday that just says, hey, we realize, you're turning 18, it's time to start the process. thinking about if you need someone to serve as an authorized legal representative, who that would be. And here's one option, which is that form that you can use, which is the limited power of attorney, that would just help with managing the ABLE account. And if that be the case, you could just download the form, have your son's signature, your signature notarized, and submit that. And that's all you would need. And that would give you some time, if you haven't made that decision as to, you know, whether you need guardianship or power of attorney. That's something that you could talk with an estate planning attorney about.
Okay, great information. Thank you.
Sure.
No more questions.
All right, great. So let's just talk about the key features of ABLE accounts. And this part right here is something that's going to apply to ABLE accounts nationwide. And then we're going to talk about specifically things in Maryland. So one of the some of the great things about ABLE accounts is they offer easy enrollment. Most people sign up for ABLE accounts completely online. Maryland is one of the few states that still offers paper enrollment if folks want that. But it's really easy to enroll in an ABLE account, and it's easy to access your funds. The contribution limit for an ABLE account currently is $15,000 per year. And the reason I say currently is because this is one of those situations where we see that this amount can change from time to time. This is actually tied to the gift tax law here that says, you know, you can give someone a gift up to $15,000 and they don't have to pay taxes on it. So this is where you're going to start to see how that ABLE legislation being embedded in the IRS code is going to have some connections here. When we launched our program, this number was 13,000. And they did increase it. So from time to time, we're going to see this increase. But currently, it's $15,000 per year. So right away, we're starting to see here that ABLE accounts, as wonderful as they are, they can have some limitations in that you can only contribute $15,000 a year unless your family member is working, and then there's opportunities to contribute more, and we'll talk about that in a minute. But this is an example of where those special needs trusts and ABLE accounts are just complementary tools. Okay, for example, if you receive a settlement, and it's, you know, settlements are usually much more than $15,000. You can't put $100,000 into an ABLE account all at one time. If someone passes and gives, you know, leaves you as a beneficiary on an insurance policy, again, usually more than $15,000, you'd have to have a place to put these funds so that you don't lose your, you know, the SSI benefits. This is where a special needs trust really comes into play. So that's something that you can follow up with at another time to investigate those things. But again, Elville can help you with answering what types of tools would be best. But we often, both of us, talk about the benefits of using these tools together. And the reason we say that is because ABLE accounts can be opened in 15 or 20 minutes. When you when you create a special needs trust, that is a process, and it's a lot of steps involved in it if you do it properly, and it can take some time. That's why, you know, ABLE accounts are usually one of the first steps that people use to kind of get things going. So the biggest feature about ABLE accounts is that it allows you to put up to $100,000 in an ABLE account before it impacts those SSI cash benefits. Now, granted, it's going to take a little while for you to reach that $100,000 account balance if you can only put $15,000 a year in. But what this has done is it takes away that $2,000 asset worry. You don't have to worry about, oh gosh, I'm going to lose my benefits if I don't spend down my money. Instead of being able to save only $2,000, now you're able to have up to $100,000 in an ABLE account before it would impact your cash benefits. And this is an important part that I want you to really hone in on, the difference between jeopardizing your benefits, losing your benefits, and having your benefits impacted. Okay, so with $2,000, if you continue to have more than $2,000 in savings accounts and checking accounts, eventually you will become disenrolled from Social Security benefits, and you would have to reapply in the future. We all know that it is a process to get these benefits. We don't want to have to do that again. With an ABLE account, if you were to exceed that $100,000 balance sometime down the road, your monthly cash benefits would go into a state of suspension. You would not be disenrolled from Social Security benefits. You would go into a state of suspension on those cash benefits, but you would never lose the Medicaid or waiver services that come with it. So that's a big difference between ABLE account, saving in an ABLE account, and trying to conserve money outside of an ABLE. So once you have an ABLE account, you're able to save money without jeopardizing those benefits. And the money that is in the ABLE account, whether it's saved or invested, any earnings that you receive on those funds is not taxable. You're not going to be paying taxes on those earnings, not when the money is in the account and not when you take it out. Okay, that's a big difference. It's not like regular retirement accounts where you take money out, you're taxed on it. The money and the earnings are not taxed when they're in the account and not when you take them out of the ABLE account, as long as you're using it on what we call qualified disability expenses. Let me hop forward real quick to this slide, and we can see some examples of qualified disability expenses. And I say that these are examples because the way it is written in our regulations is that it says that qualified disability expenses are anything or service that supports the person in his or her health, independence, or quality of life. You will not go to the regulations and see specific examples, but rather the guideline that says, consider, does this expense or service support the person with a disability in his or her health, independence, or quality of life? To help you guys out and sort of thinking what those things are, we've developed some categories. As you can see here, health, that would be prescriptions, doctor co-pays. It could be wellness. It could even be a gym membership that supports a person in their wellness, physical wellness. Housing and rent, education, we could use it for taking classes at college. It could be non-credit courses. It could be books, tutoring, employment training and support. If you need additional job coaching support, that's something you could use the ABLE account for. Transportation is going to include things like a car. It could be gas for your car. It could be tires for your car. It could be things such as cabs, Ubers, taxis, plane, airfare, basic living expenses, that's groceries and utilities. Assistive technology could be things like a computer, screen readers, anything like that. It could even be something as simple as your cell phone. Financial management and legal fees. These are things that, you know, if you need a professional financial planner or you need to consult an attorney about estate planning, you can use the money in your ABLE account to help pay for those services. And finally, the final expenses such as funeral or burial expenses. So again, these are just broad categories. So let me do a little stop right here, because this tends to be an area that we get lots of questions.
Thanks, Kelly. We do have a couple of questions. The first one is, does obtaining power of attorney also mean you have to also be the person's legal guardian, or can someone grant you power of attorney without having to also grant legal guardianship, which may be more than they want to grant?
I want to make sure I understand this correctly. So if someone with a disability,
question?
Pardon?
Would you like me to repeat that for you?
Yes, that would be great. Thanks.
Okay. Does obtaining power of attorney also mean you have to also be the person's legal guardian, or can someone grant you power of attorney without having to also grant legal guardianship, which may be more than they want to grant?
You know, this actually sounds like a question that would be better suited for someone at Elville, but if I understand it correctly, if you already have guardianship in place, okay, then that person would have to grant authority for someone to serve as the ALR, and that would be a process that they would have to go through. But if guardianship is not already in place, then the person with the disability still has the ability to decide who serves as the authorized legal representative. So that might be, maybe I don't have enough information about the situation, but that might be a great question for Elville. And you guys can always reach out to me afterwards. I'm going to provide you with that information, but that sounds like a little more complex than what we could probably answer here.
Okay, another question. Just to be clear, the account is in the name of the person with the disability, even if it's a minor, and the parent/guardian manages the accounts.
Correct. It's always in the name of the person with the disability, whether they're 2 months old or 80 years old. They are the account owner and beneficiary.
Another question, what about recreational travel? Is that a QDE? On the other hand, is travel allowed for medical treatments if you have to travel long distance?
So again, we would go back to asking, does that travel to medical appointments, is that something that is necessary to support them in their health? Okay, so there is nowhere in the IRS code where it's going to specifically list that, but you as the authorized legal representative have to make that decision. And obviously, if you have to travel long distances to get to a medical appointment, that's part of what has to happen in order to support that person in their health. And this is what I'm going to tell you. There is no one at MarylandABLE that is going to be looking at your expenditures and making decisions. Yes, this is a QDE. No, this is not. That's something that the authorized legal representative must decide. And the only person that is ever going to look at those things would be not DDA, not Social Security. It would be an IRS auditor. So people with people with ABLE accounts are not any more likely to be audited by the IRS. They're also not any less likely. So if you happen to be one of the people in a random draw that gets audited by the IRS, they're going to say, okay, you've got this tax protected savings account. Number one, do you really qualify to have this account? They're going to want to know that. So they're going to want to see that you either are receiving SSI or you have a disability certification form. That's why we ask you just hold on to those in the event of an audit. Secondly, they may look through your expenditures and they may say, what is this? Tell me how this is supporting the person in their health, independence, and quality of life. Let me give you an example. My daughter has always wanted to take a dance class, okay? I used the money in her ABLE account to pay for the dance class. It supports her in her physical health and also in her quality of life, in that she wants to be included in the community with her typical peers. I would have no problem explaining that to someone from the IRS if they asked me, what is this? Such and such school of dance. How is this a QDE? I would have no problem. At the end of the year, they do a recital. Everyone must wear the same uniform, costume, all the way down to the accessories. I purchased those items from the dance school so they could look at those receipts and say, wait a minute, what is this, dance costume and these rhinestone hair clips? Like, how is that a QDE? And I would be able to say, me as the ALR would be able to say, well, in order to participate in this class, at the end of the year when they have a dance recital, we all have to wear the same things. This is part of the process. So I have no problem supporting that. You just need to make sure that you're able to justify that expense, that it supports in health, independence, or quality of life. So yes, I would venture to say that a vacation or recreational travel does support a person in their health, and quality of life. I think every single person on this call right now would say that we all need a vacation. We need time to, regroup and rest and refresh ourselves. So again, that would be something that I personally would argue, if I had to, that my daughter's vacation would be something that supports her in her health and quality of life. But that is a decision that you all need to make individually. I do need to clarify, however, that a vacation for your family member would only mean that they could use an ABLE account to pay for their vacation. Example again, my daughter's dream is to go to Disney. She's saving up one day to go there. When she goes, she can use the money in her ABLE account to pay for her tickets to the park, her airfare, her meals, and a portion of the hotel. She cannot pay for our entire family to go to Disney. She can't even pay for one of us to go to Disney because the money in the ABLE account must be used for the person with the disability. So I hope that kind of gives you guys a flavor of how to determine what a qualified disability expense is.
Thank you, Kelly. Very well said. One other question. Are the expenses associated with setting up the special needs trust considered as eligible expenses for ABLE?
Again, I'd have to say, if setting up this special needs trust is something that's going to benefit the account holder in their independence in the future and providing for them, I think that you could definitely make a case that those funds could be used to establish that trust. But again, that's something that you're going to have to feel comfortable in the event of an audit. So far, nobody's ever been through an audit, but yeah, that would be, it's definitely legal fees, professional fees are examples of qualified disability expenses.
Another question, are ABLE accounts protected from creditors' garnishment?
That is a good question. And I could, if you put your email in the box, I will check. But this is a protected account from, that's a good question. I will ask that and I will get back with you. So you want to know if it's protected from creditors. Okay.
I will get that.
Okay, super.
Person's
Thank
information and be sure to get that to you, Kelly. Thank you.
Sure.
No more questions now. Thank you.
Okay, great. And real quick, just want to mention to you that with an ABLE account, if you need to transfer your ABLE account to another state, you can roll those over. So if you open an account here in Maryland and you retire in another state, you can either keep it here in Maryland or you can move it with you. So also about rollovers. Rollovers are possible from 529 college savings accounts to ABLE accounts. So sometimes people open accounts, college savings plans when their child is born. And then as things, as they develop through life, they say, I'm not sure my son or daughter is going to be going to a traditional four-year university. They may not, but what they can do is, if the person has a disability and has an ABLE account, you can roll over funds from a 529 account into an ABLE account, and then you're able to use that money, those funds, for all kinds of expenses, not just education expenses. So a lot of people choose to do that. Just bear in mind that when you're rolling over money, you're still going to be limited by that $15,000 your annual contribution. So sometimes people have to ladle out those distributions over a couple of years, but you're able to do that. I did mention to you that there is a possibility to be able to contribute beyond that $15,000 annual contribution limit, and that is by the Able to Work Act. So this says that if a person has an ABLE account and they are working and they meet a couple criteria, they can contribute up to $12,000. Actually, I'm going to need to change this slide. They can contribute up to $12,760 for year 2021. And the reason I say this changes is because this number here, this 12,000, is actually tied to the federal poverty level wage for a one-person household. So every year this number changes. For the year 2021, it has been increased to 12,760. So having said that, here's the criteria. If the person is employed and they are not currently contributing to their employer's retirement fund, and if their employer is not currently contributing to his or her retirement fund, they are eligible for able to work contributions up to $12,490. So if someone makes $5,000 a year, pardon me, they can contribute up to $5,000 in able to work contributions above and beyond their standard $15,000 a year. If a person makes $20,000 a year, they are limited or capped at that 12,760. Okay, so that is something that you want to keep in mind. If your son or daughter is an adult and they're working, anytime they contribute money, make sure you, when you're checking the box, it's going to ask you, is this a standard contribution or is this an able to work contribution? You want to be sure to click the able to work contribution, because that way it lets them put extra money in and it leaves that other standard contribution limit open to anybody who wants to contribute. Okay. Let's take a look at some of the Maryland features. In order to establish your ABLE account, you're going to, when you open the account, you have to put a minimum deposit of $25 into the account. That is the account holder's money. It's not a fee, it's just your minimum deposit. From that point on, you can make contributions by check or by electronic transfer, because ABLE accounts are online. A lot of people just tend to do it electronic transfer. We can accept contributions to the ABLE account over the lifetime of the account up to $500,000. And this always confuses people, because I know we talked about the $100,000 limit. That $100,000 limit is the amount that you can let your account balance, your ABLE account balance, grow to before it's going to impact those SSI cash benefits. But you can actually continue to contribute up to $500,000, but that's where they're going to cap it until that account balance falls below 500. You can continue to contribute. Same thing with that $100,000 cash, that $100,000 contribution limit. When we talked about going to that limit, you're going to have your SSI cash benefits in a state of suspension. But at any point that balance falls below $100,000, you should be able to automatically have those benefits turned back on. So you should be able to automatically receive, that's the way it's set up, is to automatically receive those cash benefits again when the account balance falls below $100,000. And this $500,000 limit is tied to the Maryland 529 group. This is the amount of money that they're able to put into a 529 account, because it is currently the estimated amount of money that it will cost for a child born today. By the time they're of college age, this will be the cost of college tuition. And again, this amount changes from time to time. When we launched our program, it was $350,000, and it is currently $500,000. Just want to mention that Maryland does accept national enrollment, so we do have ABLE account holders from other states. Here in Maryland, we have a couple unique features that not all other ABLE programs have. We have a gifting page, a prepaid card, and payroll deduction, which will be available very soon. I want to just touch on these things quickly. The online gifting page is part of the account platform that you have. It allows you to set up a gifting page. It doesn't automatically come set up. You set it up yourself, and that way you can use the gifting page for holidays or for birthdays. Some people use their gifting page if they're saving up for a special trip or a special medical expense, or putting a wheelchair ramp on their house. Kind of think of it like a GoFundMe page, in that people can make contributions to the account confidentially and just electronically. But the money that you receive for the contributions would be eligible for a tax deduction for people who contributed that live in Maryland. So I just like to share that since our program has launched, okay, so in a little over 3 years, we have received, or I should say our account holders have received $1,447,000 in gifts through their gifting page. So people do use this gifting page. People are happy to do it. So it's something, if you're not using, you might want to think about it. The ABLE prepaid card, this is a great feature that we have here in Maryland. It helps you to be able to easily access those funds in your account. So this is something that doesn't automatically come with your ABLE account. Your ABLE account, you can access your funds electronically by transferring money in and out of your account, or you can opt to have the prepaid card. There is an additional fee of $1.25 per month to have the card. But this is something that you can use online, and you can use it in stores anywhere that Visa cards are accepted. You'd be able to use this card. What's really nice about it is it gives you the ability to access funds in the account, but it doesn't give the person, say for example, my daughter who's 17, I'm trying to teach her about spending and how we spend money and budget our money. So I'm able to load money onto the prepaid card, but it doesn't give her access to all the money in her ABLE account. So this is a great budgeting and teaching tool for those of us who want to, begin to teach our family members about saving and budgeting, and makes it a safe way to do that. You decide how much money gets loaded onto the card. It's not a credit card in that it's not a line of credit, but rather you're just taking money that's in your ABLE account and loading it onto the card. The money that's on the card is still a protected asset when being considered by SSI. Okay, so lots of great things about this. It's available through the account electronically. It lets you look at what your expenditures are. It would allow you to upload receipts if you want to keep receipts there. It lets you set spending limits. You can block certain purchases. So many features. I could do a whole session on just the prepaid card, but it is a good tool to consider if you're someone that's going to be using your account in a transactionary way. Some people use ABLE accounts just for long-term savings or investments. For folks like that, it wouldn't make sense to have a prepaid card and pay $12 a year or $12.50 a year, whatever it is, to have a prepaid card if you're not really accessing your funds often. But for those who do, someone such as myself who uses it for prescriptions for my daughter, her doctor co-pays, anything she needs, I can just swipe the card and it's easy. Register her for summer camps, put the credit card number into the online registrations. It's been very easy and convenient for me, but again, something that each individual has to consider. We do have payroll deduction that's going to be available very soon. This is right now just limited to the account holder and the ALR at this point. Maryland tax incentives here. So anyone that contributes to an ABLE account who lives in Maryland and pays Maryland state taxes is able to access the $2,500 income tax deduction per contributor. So for example, my husband and myself are the only ones that are really funding Lily's ABLE account. She doesn't have a job. She doesn't have excess SSI funds or anything right now. We're putting the money into her account. So we are able to take a maximum of $5,000 deduction on our income, on our Maryland tax income tax. It doesn't apply to federal taxes, but every little bit helps. There are account fees to have an ABLE account, and the fee is $35 per year. This fee is withdrawn quarterly at $8.75, and it is prorated. So folks that opened an ABLE account in the month of December, they didn't pay $35. They probably paid like $2 for the year, okay? There's also asset-based fees on investment options, and we're going to talk about those investments real quick. there's a couple of ways. If for folks that have an ABLE account, you can choose how you want to keep your money in your ABLE account. You can use what we call the cash option, which is like it's very similar to a FDIC insured banking product, like a savings account. So whatever the federal interest rate is, that's the amount of money that you're going to earn. It is an FDIC insured banking product, so it's, some people just want to go that route because they don't want to worry about taking any risks with losing money on investments. Other folks open accounts very early in life for their kids. They want to use it as a long-term savings account, and they're more interested in the investment options. And we have three choices. We have the conservative option, which is going to be a fund that is mostly, or 80%, in bonds and 20% in stocks. We have a moderate option, which is a 50-50 split between savings and bonds and stocks. And the aggressive option is going to be 84% in stocks and 16% in bonds. So this is something that you can decide at any point. You don't have to worry about, I opened my ABLE account and I chose the cash savings option, now I can't invest money. You are able to change this, your savings and investment strategy, up to 2 times a calendar year. So you can also make a decision and say, hey, I want to maybe put, I don't know, I might want to try a little bit with the investments. Maybe I'll put 20% in investments and leave 80% in the cash savings option. Again, it's totally up to you. Whatever is the best strategy for you and your family financially, that's what you want to look at. This is a great place that you can consult a financial advisor, decide what works best for you, but just to let you know, you do have the options. Enrollment is done completely online at www.marylandable.org if you want to. Again, we do offer a paper enrollment kit, which is something you can download from our website. I would say that if people are interested in opening a MarylandABLE account, please actually type that address in. Don't just Google MarylandABLE, because if you do, what's going to pop up is something that says ABLE now in Maryland. And people have gone on this site, they've opened up their ABLE account only to learn that they have enrolled in a Virginia-based ABLE program. And if you want to go with Virginia's plan, that's fantastic, but just make sure that you're getting with the plan that you want. They have made it possible for them to be the first name that pops up when you Google, no matter what state you're in. It'll say ABLE now in Tennessee. So this is something that you might want to consider, because you're not eligible for the tax deductions for your contributions outside if you're in a Virginia plan or another state's plan. So on this website is our program disclosure book that gets into all the details that you would ever want to know, things that we can't possibly cover in 1 hour. We have a frequently asked questions section that's super helpful, and all the forms that I mentioned are also available on this website. To open your account, the things that you're going to need is you're going to need the social security number for the account holder. And if there's an ALR, you're going to need that as well. And any paperwork. So this would be a place that you would be able to upload your guardianship papers, or if you have power of attorney papers, upload them. You could also fill out the limited power of attorney for ABLE account only and upload that and send it there. The next big decision is that linked bank account. So there is no Bank of ABLE brick and mortar building that you're going to go to, but rather you link your ABLE account with an existing checking or savings account. So that's a decision you'll need to make. Let me give you an example. For right now, because my daughter is a minor, doesn't have a job or receive SSI benefits, I have chosen for my convenience to link her ABLE account to my regular checking account, because it's her father and I that's funding the account. So for our convenience, we've linked it that way. Now, I do have an option when she turns 18 and receives SSI benefits or gets a job, I can switch that linked account over to her account. But that's just something that you'll want to think about. I'm going to stop here, Jeff, because I know we're getting very short on time, and I've covered a lot. I just want to see if there's any questions I haven't been able to answer as of yet.
Sure, thanks, Kelly. We actually have up till 11:30. If you have the time. So,
I'm available. Yeah, I just want to make
Yeah.
sure I get around to people's questions.
Sure, thank you very much. And we do have a few questions, so I'll delve into those here for a couple minutes. The first question is, please explain the exact tax advantage with putting money into an ABLE account. Taxable income reduction is for federal tax, state tax, or both?
Okay, great question. So the tax benefits are a couple. First of all, the person that is saving or investing in the account is able to have growth on the account without paying taxes on the earnings. Okay, so that's number one. The second one is for contributions made to an ABLE account, that is something that you're able to claim as an income deduction on your Maryland state taxes, not your federal, but on your Maryland state taxes. So if grandma contributes, money to the ABLE account, she lives in Florida, this is not a tax advantage for her because she doesn't pay Maryland state taxes. But anyone in Maryland that pays Maryland state taxes is able to take contributions up to that $2,500 limit. Okay, it's per $2,500 per ABLE account per person. So for folks that are married and filing joint, they can take advantage of that $5,000 income tax deduction. And this is something that you're able to reduce your Maryland state income. Okay, so you're able to take those deductions off that, and that's how it benefits, but it only applies to state.
Okay. Next question. Please confirm if one of the beneficiary of employer contributes to a retirement plan, is it still okay? Would you like me to repeat that? So
Yes,
please confirm if one of the beneficiary of employer contributes to retirement plan, is it still okay?
So if you mean beneficiary, the account owner and beneficiary, if that person is working and contributing to a retirement account, they don't qualify for able to work contributions. And if their employer is contributing on their behalf, they can't take advantage of able to work contributions. That's not to say that they can't have an ABLE account. Anyone that meets the eligibility requirement of having a disability prior to the age of 26 and has a qualifying disability can open an ABLE account. They can contribute money to their ABLE account up to the standard contribution limit of $15,000. But for folks who are employed, they can contribute up to $12,760 extra if they meet the criteria, which is that they're not contributing to another retirement account. Because the IRS is looking at this and they're saying, okay, you're going to get one chance for tax-free savings, tax-free growth and tax-free savings. So you can decide, you may be better off, the person, this is where a financial planner comes into play, and say, hey, you know what? It makes more sense for you to contribute to your employer, to your retirement account through your employer, because they match and you're getting more money that way. Or you might say, well, it makes more sense for me to contribute to my able to work contributions. That's an individual decision, but the IRS doesn't allow both.
Okay, thank you. Next question is, my ABLE account is linked to my PNC bank account. I presume it is simple enough to, it says dollar cost. Let me try to go back here. My ABLE account is linked to my PNC bank account. I presume it is simple enough to dollar cost and put money every month automatically into ABLE, right?
Correct. Yes.
Okay.
So for example, I happen to be with Bank of America, you're with PNC. What I do is I was able to log into my daughter's ABLE account, and there's a button there that says contributions. If you click on that, it'll give you an opportunity to set up a monthly contribution, and you decide how much money that is. You know, it could be, as long as it's a minimum of $10 a month. They don't let you do like $1 a month or something like that, but there's a minimum contribution of $10, and you can set it up to automatically come out of your PNC bank account and go to the ABLE account, just the way I've set it up, so that there's a monthly contribution that goes to my daughter's ABLE account. And I do that through her ABLE account because I'm her ALR.
Okay.
So it doesn't matter what bank you're with.
And perhaps something you can revisit here briefly, Kelly. Do you have to have POA in order to open the ABLE card on behalf of the person who is using the account? We want to manage what funds go onto the card.
So if you're the authorized legal representative on the person's ABLE account, that automatically gives you the ability to manage the funds that get transferred onto the ABLE prepaid card. So if you're not an ALR on the ABLE account, then you're not going to be able to do that, but you wouldn't be able to do anything on the ABLE account. You know what I mean? Like, so if the person is managing their own ABLE account and doesn't have anyone listed as an ALR, nobody's going to be able to go on and get, you know, it would have to be his or her own decision to get the ABLE prepaid card, and you wouldn't be able to manage it. But if you are set up as an ALR, you're automatically able to do that.
Thank you. Can you also cover if MarylandABLE is subject to Medicaid payback provisions?
Yes, that's a great question. The way it is set up is Maryland is one of the states that has a letter from the Department of Health and Human Services Centers for Medicaid and Medicaid and Medicare that was issued on September 7th of 2017 that says that they will not recoup funds in an ABLE account upon the passing, upon the passing of an ABLE account holder, that Maryland Medicaid will not recoup funds from the ABLE account, but here's where it gets a little tricky, unless federally mandated to do so. So Maryland says they're not going to do that, but they have it in the law that if they were federally required to do it, they would. And the way I understand this, and again, I'm not a Medicaid specialist. I don't have any, special training in that area, but apparently funds that come from Medicaid, from a Medicaid waiver, are from two different buckets of money, There's state funds that go into those Medicaid services, and there's federal funds that go into Medicaid waiver services. So the state of Maryland has said, we will not. But the federal government has never issued such a statement. So this is where, you have to make this decision on your own. I will tell you that to date, there have been people that had ABLE accounts that have passed away in Maryland and in other states. To date, there has never been any attempt to recover federal funds, or the federal government has never attempted to recover funds from an ABLE account. But can I promise you that the federal government in the future will never, ever, ever, ever do that? I cannot, because they've never said that they couldn't. But the state of Maryland says that they will not. I know that's a long answer and it's complex, but I can't predict what the federal government will ever do, but they have not.
Okay. Another question, to be sure, the ABLE card can only be used by the holder for QDEs, correct? It cannot be used for just anything my son might want, i.e. video games, toys, etc., correct?
That's correct. So think of the money that when the money comes out of your ABLE account and loaded onto your prepaid card, it's still ABLE funds. So it would have to be something for a QDE. It could be clothing, it could be shoes, things that he needs. But to spend all the money on the prepaid card on Legos, I don't know how you'd be able to justify that. In the event of an IRS audit. I mean, to buy a video game occasionally, that might be something you could justify. You could say, oh, I don't know, my son participates in these online games and he needed the game to do that. It's part of his quality of life. It's part of his social experience. I mean, that might be something that one might be able to justify, but to make it a regular expenditure, I don't know that you'd be able to do that. Same thing, like people say, well, what about if, you know, my son is 24 years old, and if he wants to go out with his friends and go to the bar and have a couple of beers, can he use his prepaid card? Well, to me, going out to a restaurant with friends, that's part of, you know, your quality of life, your independence in the community. But can you take your prepaid card and go to the bar every day and buy the whole bar beers and beers every day? I mean, that's something that you would have a hard time justifying. But to have a receipt that you went to a local pub and had a couple of beers with the friends, again, that's something you would probably be able to say quality of life, social skills.
Okay, another question. If you are the parent opening the account, do I have to upload my son's birth certificate?
No, you don't need to upload the birth certificate. What it's going to ask you for, and let's see if I have it on here. Oh, goodness. Okay, what it's going to ask you for a driver's license. Of course, if your son is under the age of 18, he's not going to have it. He's not going to have a driver's license. So you're going to be the one that's submitting your documentation, which would be your, you know, driver's license is usually the easiest. For people that don't have a driver's license that are over the age of 18, you can do a birth certificate, you can do your social security card, something like that. You have to pass the authentication process for the banking portion of MarylandABLE, because we don't want, you know, spammers and robots opening ABLE accounts. We have to prove that they're actual real people, or the bank makes sure when the bank is going to make sure that they're real people, and that's one of the ways that they do it. But if they're under the age of 18, they're not going to have that information. You'll just provide the social security number. But over the age of 18, if they have, if it's not a driver's license, it could be the state ID that you could submit would suffice.
Okay, gonna keep them coming at you here for another couple minutes, Kelly.
Okay, and you know what, Jeff, but while you're reading those questions, let me just,
No, sure.
while we're looking at this slide for a second, I do want to point out that there's something that you might see on the screen. Let me hop back over here where we have open an account, and you see someday here on the left-hand side of the slide, and let's go. I don't want people to be alarmed that they've gotten to the wrong website, or that they're, you know, somehow been taken off track into the deep dark web, or you know how things, you got to really watch things nowadays the way things go. But someday is a BNY Mellon company. This is a banking financial institution. It's a bank, and they are our program manager, because ABLE has two pieces. We are the administrators of the ABLE program here in the state of Maryland, but we're not a bank. We can't make trades. We can't put money into bank accounts and withdraw money on your behalf. We needed a banking organization to do that, and that's someday, which is part of BNY Mellon. So don't be alarmed if you see that. You'll get correspondence or emails from them. Sometimes they'll be sending you the quarterly statements. It's going to come from someday. So just wanted to let you know about that. Okay.
Okay, great.
Oops, sorry.
So a couple more questions. What are the differences in other ABLE accounts from Maryland? Who manages the investments?
Okay, so there are, like I said, 42 different ABLE programs across the country, and a really great resource if you want to look at other ABLE programs is to go to the website for the ABLE National Resource Center. And when you go there, it will, there's a little feature on there that you can plug in the features that are important to you. Maybe it's the account fees, maybe it's investment options. You can pick a couple criteria and it'll let you compare different states. So if, for example, you want a lot of investment options, the state of Tennessee, I believe, has 11 different options. So some people are very financially savvy and they want more choices, and that's a better fit for them. Some people are all about, I want something with the lowest account fees. So, you know, it just depends what's important to you. But here in Maryland, with our we have 3 different actual investment options that are managed by Vanguard. And Vanguard, with the conservative, moderate, and aggressive option, they're going to pick that portfolio for you. You don't get to say, I want the conservative option, but I want you to invest this much in this stock for this company. It is a preset selected by Vanguard and managed by Vanguard. And also just to let you know that while they select the portfolio and manage it, we do have a director of finance that works for MarylandABLE who is monitoring Vanguard and how they're selecting and managing our funds. We also have our executive director who is has a extensive background in finance who also monitors that. We have an outside auditor that looks at our Vanguard managed investment portfolio every year. It's audited by them. And we also have our board of directors who monitors that as well. So we do have a lot of people looking at that, but it is managed by Vanguard.
Okay, and just have a nice comment from a nice friend of our firm. Such a great presentation, Kelly. Great information. Thank you so much.
Thank you.
And looks like we have another question here. Can you explain how one can fund ABLE accounts and special needs trusts? Decide which one can fund.
Okay.
Yes, just decide which one can fund.
That is terrific. So this is important to know that contributions to an ABLE account can come from anyone. It can come from the authorized legal representative. It can come from any family members. It can come from friends. It can come from the account holder, him or herself. You can use money that you receive from small settlements to put that into your ABLE account. You can use money from gifts, anything. Anybody can contribute to an ABLE account. So that's a good thing about that. Again, we talked about receiving those large inheritances or large insurance settlements. That is something that you're going to have to look to special needs trusts and things like that to handle those large amounts of money. Once you have a special needs trust set up, I do know that a lot of people decide to make to fund the ABLE account annually from the special needs trust. Not everyone does that. Some people choose to do that. That's where it's a great, it's great to consult your legal advisor to see if that works best. And again, what's nice about having the money funded into the ABLE account is you can very easily access those funds. The way I understand with special needs trust is the purchases have to be approved by the administrator of the trust, and there's a process that you have to go through that might take a little bit longer. But once the money has been funded into the ABLE account, the account holder can access those funds much quicker. So if he or she needs to, go to the doctor, you swipe the ABLE prepaid card. You don't have to submit that expense to the trust facilitator, administrator. It's much easier access. So some people choose to do that.
Okay, coming down to the end here, Kelly, does the $15,000 per year contribution include interest?
It does not. So it can go beyond, if you have earnings on your contributions and your account balance grows beyond $15,000, that does not impact your contribution limit. It's just going to the actual money that gets contributed that year. So, your account balance is likely and hopefully going to grow. I mean, a lot of people, like I said, do use it as a very transactionary account. They may put $15,000 in a year, but they may use $10,000 of it a year for their qualified disability expenses. Others are just putting the money in. They want to see long-term growth, that they don't need to worry about it. They just want to put it in there and, make it available way in the future for their child. We see this especially a lot with kids that are born with disabilities when they're infants. Parents are really not thinking about it transactionary yet. They're thinking about long-term growth. So.
Okay, I believe we just answered this question. I did not want to ignore it though. Do funds in ABLE accounts earn interest? So I think you just answered that.
Yes. And this is,
Okay.
With the cash savings option, it's going to be tied to the federal interest. So right now our federal interest rate is very low. So the earnings on your investment are going to depend on how the market is going. So that's a big decision that you have to make. Do I want to invest my money, the ABLE funds, in an investment option? Because it can be volatile. If the stock market is doing great, then everybody's happy. But if the stock market is doing poorly, you could lose money. So it's really something you need to consider what your investment strategy is and consult an advisor about that. Jeff, I will take any other questions, but I also wanted to real quickly just run through my little important numbers in mind. Okay, so these are just some numbers we talked about. Wanted to bring them out again. So that $25, that's your minimum deposit to open the account. Once you've deposited that money, it's up to you when you want to put money in again and how much. As long as your next deposit is a minimum of $10, you can decide when and how much. There is a $35 annual account maintenance fee for the account. Again, we talked about it being prorated and it comes out quarterly. For people that choose the investment option, there's some investment fees that are associated with that as well. There is the monthly fee for the prepaid card if you select it. So again, this $125 is only coming out if you have selected the prepaid card. The $15,000 is your annual standard contribution limit. For those who can qualify for ABLE to work, we know that they can contribute up to $12,760 extra. The $100,000 is that contribution limit before your SSI cash benefits are impacted. Even if you exceeded a $100,000 balance in your ABLE account, you're still going to be able to keep your Medicaid and those waivers that are associated with it. And that's one of the big features for an ABLE account. You may have your SSI cash benefits go in suspension, but again, at any time, let's say you had $100,000 and a couple months later you took $20,000 out to put a wheelchair ramp on the home. This drops to $80,000. It's set up so that you would be able to automatically receive those SSI benefits again, because again, you weren't disenrolled. $500,000 is the lifetime account limit, after which you can't make contributions until the account balance falls below that. And $2,500 is your state income deduction per contributor per ABLE account. So if you have 2 kids with 2 ABLE accounts, you're married and filing joint, you could claim up to $10,000 if you contributed that much. I wanted to make my information available. Again, that's our website that you see on the screen. If you have a customer support question like, hey, I have an ABLE account, but oh my gosh, I forgot how to set up that automatic deduction. Oh golly, what did she say? How to do that? Call that number. They're available Monday through Friday from 9 a.m. until 6 p.m. You give them your account number, they'll walk you through the whole process. They'll see your screen, they'll say, you see that little button up there? Now click on that, now drop down and do this. They're really helpful. I know, because when I first opened my ABLE account, I had to do this the first couple of times. You can also reach out to us at questions@MarylandABLE.org if you have any questions about this presentation. We want you to follow up with us. We're happy to help you. Please consider following us on Facebook. I try to post helpful information about things that impact your ABLE account, like our stimulus checks that are coming out, which, by the way, can be contributed to an ABLE account. You just have to spend those funds within a year, though. Okay. There's different, we're going to be offering another webinar about unemployment and stimulus checks. So there's things like that on our Facebook page. Join our mailing list. We send out 4 newsletters a year. Lots of good stuff in there. And I just want to say, thank you guys. Thank you so much for this opportunity. It's been wonderful. Any other questions? I'm happy to answer.
Thank you so much, Kelly. We do have a few more questions, and I think that'll bring us pretty close to 11:30 here. So let's go through them. I understand that there may be some minor tax consequences for payments not used on QDEs. Have there ever been instances of quote unquote bad ALR spending the funds inappropriately? What legal actions have been taken on the bad ALRs?
Okay. To our knowledge, it hasn't, again, because we're not monitoring disbursements from ABLE accounts. We're not monitoring receipts. The program manager doesn't do it. MarylandABLE doesn't do it. 2 reasons. First of all, there's 2 full-time employees for MarylandABLE. We couldn't do it if we wanted to or even tried. But really, it's a legal issue in that the account holder or ALR has to make that decision. And the only one that's going to call that into question would be an IRS auditor. We've not heard of anybody being audited with an ABLE account. We're not aware. I mean, is it possible that someone opened an ABLE account and was audited and the IRS said, hey, you spent money on this ABLE account on, I don't know, whatever. It's not a qualified disability expense. I guess it could be possible. We've just never been notified of that. And what could happen is the money that was dispersed from the ABLE account for a non-qualified disability expense. So the IRS said, nope, don't buy it. Don't believe that, these 500 boxes of Legos was a qualified disability expense. You would have to pay you would be taxed on the earnings for that amount of money. And there would be a tax penalty. And that's something that's available. If you want to know the specific tax penalty, check our program disclosure book, because you would pay taxes on the earning, plus there would be a tax on, I'm not sure how they split that out, but one of it's on the earnings and one of it is for taking a non-qualified disbursement. So that would be something to look in our program disclosure book under tax implications.
Okay. Next question. I realize Vanguard is the custodian of the investment fund for ABLE. Why is the expense ratio for managing it 0.4%? It is way higher than their typical rates for mutual funds, which can be much lower. I do not know the answer to that question. I know that, if you want to send me that question, I can send it to our executive director. I wasn't there in the beginning when they were the ones that the state awarded the responsibility for Vanguard, and I could ask her about that, but I'm not sure. Okay. What if someone decides after establishing and funding an ABLE account that they want to close the account? Are there penalties aside from possibly going over SSI and Medicaid thresholds?
You can definitely close the ABLE account, but remember, now that if let's just say you had $1,000 in the ABLE account, you want to close it. If you don't use that money on a qualified disability expense, then the earnings are taxable, because you've been earning interest on the $1,000 and not paying taxes on it. So you would just have to, you could close the account, but it's a non-qualified disability expense unless you're using the money to, you disperse the money out of all the money that you had in the account, you dispersed it out on qualified disability expenses and closed it. There was no balance. There's no fee to do that. But if you just close the money out, take the $1,000 and put it in your checking account or savings account, there would be a tax on the earnings. But you could do it, yes.
Okay. One or two more here. If the $600 stimulus check is put into ABLE, did you say it must be spent within 1 year?
If you have money in that's what we have been told, that the stimulus money has to be spent within a year. Yeah, so the people that received the first stimulus check of whatever it was, 1,200 or whatever, you know, if they got that in March, they're coming up on that deadline.
Last question. And if there are any other questions, now is your time to please get them in. Is SSA, is that Social Security Administration, auditing any ABLE accounts?
They don't audit the disbursements, the QDEs, but they are aware of the account balance for every ABLE account. And the reason they are is that's part of our program manager's responsibility, is to send Social Security Administration a report of our account holders' account balances.
Okay, very good. So it looks like that is all of our questions. We have a number of people thanking you for a great presentation. Kelly, I'd like to thank you again for just a wonderful presentation. You are a wealth of information, and just taking all those questions on the fly and having those answers off the top of your head. I'm not sure how you do it. We get more questions. I'd like to thank our audience and attendees as well. We get more questions from this presentation than practically any other webinar that we offer here at Elville & Associates, and we offer a lot of them, and it helps other people learn. And I'm sure Kelly will agree with that, and your questions are critical to a great presentation. So we'd like to thank everybody for those questions. And so just a couple follow-up items very briefly in 90 seconds here. I'm going to be sending out the video for this presentation to you by tomorrow morning. So if you have it, something that you missed, you want to revisit, you want to share it with family or friends, please do so. And we have a very busy webinar schedule coming up over the next month. In the next week, tomorrow, we're going to have Victoria Hathaway with the Bob Lucido team. She is a certified senior advisor talking about learn the truth about everything you ever wanted to know about seniors, real estate, and more. Tomorrow at 10 o'clock, we have about 80 people signed up for that webinar, the most in any webinar we've ever done in our year of doing these virtually. So we are thrilled to have Victoria coming to speak to everybody tomorrow. We also have Estate Planning Essentials next Wednesday at 10, and then Thursday the 21st, Integrating Your Business and Estate Plans with Chuck Borick, who is of counsel here at Elville & Associates. He's with the Borick Group, a terrific attorney that's been a friend to the firm for many, many years. So, and check out our events page at elvilleassociates.com for more programs that are set up through February at this point, and I'm adding more later in the day. So again, lastly, please consider us as a resource for your legal needs, for your family and you. We're really proud of the value that we try to provide and strive to offer our clients, you know, working with the ideals of collaboration, compassion, and client education in mind with every client, every time, and partnering with people like Kelly and MarylandABLE and other organizations. So we can't do it without people like Kelly as well. So just want to thank you for being here, and we appreciate your support of our webinar series. And if there's any further questions, you can follow up with me, also follow up with Kelly. And I think it's been a great start to our webinar series. And if it's the other ones are like this, I think we'll be in good shape for the rest of the year. So thanks for helping us start off well, Kelly.
Thank you, Jeff. Thanks everyone for attending. Follow up with me. Send me more questions if you want. I'm happy to do it.
Yes. Fill out the survey, the post-webinar feedback. We really want to hear from you. how we did today, any ideas that you have for other webinars, and if there's anything we can do for you here at the firm, let us know. Have a great day, everybody. Thanks.
Thanks. Bye-bye.